Get the latest Zacks research, analysis, and rankings on exchange-traded funds in Exploring ETFs. Going to take a look back now at 2013 as far as ETFs are concerned with our ETF strategist, Eric Dutram, who joins me here. And you've got both sides of the story, winners and losers. But being the upbeat guy that I am, we'll start with the positive side. So basically, overview ETF industry for 2013 was overall a good year?
Pretty good year overall for the ETF space. And that's largely due to how great the market was doing for much of the year.
Sure.
A lot of investors really embraced a lot of equity products. These were the big gainers, specifically in the developed market space, and a lot of income funds were actually pretty popular. So these really led the way. We actually saw over 150 new funds launch. We saw 60 close to give us a net increase of about 90 funds on the year. And total ETF assets under management is now over $1.6 trillion. So it's becoming a pretty sizable business here. And several funds obviously led the way in this respect, but a pretty good year overall for the entire space.
All right, so for the most popular ETFs, you're looking at some that have had some huge inflows.
Right.
Short duration bonds you've got up first here, right?
That's right. Obviously with QE concerns, we talk about this pretty much every other week here.
Yeah, right.
And with the rising interest rates, a lot of investors have been looking to reduce their duration risk for bonds. And some of these lower rate bonds have been really popular in this respect, specifically bank loan fund from Power Shares, BKLN. This was the most popular bond fund on the year, but then also some other products kind of similar. You get BSV from Vanguard. This is just a short duration treasury bond fund. And then also FLOT, surprisingly enough, floating rate bond fund.
Right.
So it's not going to be as tied to longer term interest rate, and so you're going to get a lower interest rate risk here. All three of these have been really popular and led the way in the bond space so far for 2013.
All right, and then the developed markets were also big winners.
That's right. Obviously, Europe has been coming back pretty strong this year, and Japan has been doing very well thanks to the whole Abenomics issue with kind of trying to depreciate the currency, and then rekindle some exports and other items like that. And that's really boosted the market and boosted interest in Japan funds. DXJ led the way in this respect, and this is a hedged fund, so it takes out the currency risk of the yen. And then also EWJ was another very popular one, and that's kind of the broad market fund for Japan. And then on the European side, VJK was the most popular for Europe, and it was one of the 10 most popular funds on the year for inflows.
Yeah, first time I heard that Abenomics term, I thought to myself, gee, what does Lincoln have to do with this? But anyway, and with the U.S. surging as far as market is concerned, not surprising to see American funds on top.
That's right. The traditional winners won again this year. SPY was the biggest winner, increased its lead over all the other funds on the space. More than $11 billion in assets it added this year. Now it's over $163 billion, but also some of the other competitor funds that you don't necessarily hear as much about, like IVV, VOO, which also follow the S&P 500. These were also huge gainers on the year and kind of led the way higher for the space.
All right, well, run down some of the losers if you have to, I guess.
Well, some of the biggest losers were in the investment grade bond space, LQD. Investors kind of wanted to, as we talked about earlier, focus on shorter duration securities. So they kind of, this one fell by the wayside. Emerging market funds hit hard by a lot of the issues in the BRIC countries.
Right.
So EEM and VWO, two of the most popular products in this space, were really hard hit. And then GLD was the biggest loser by far, lost over $20 billion in assets, and it's now down to just $32 billion in assets. And this is a pretty huge loss because at one point, GLD and SPY were competing for the biggest ETF on the market. But as we were saying just a slide ago, SPY has over $160 billion, and now GLD has just 32. So it really shows you how far gold has fallen in just the past year or so.
So are you hopeful about the new year as far as ETFs go?
I am. We've seen a strong ETF growth going into December, and I think there's still some segments out there that could help the ETF world get up to that 1,700, maybe 2,000 funds. I think 2,000 funds is not going to happen in 2014, but I do think some strong growth will happen, and assuming the market holds up and the QE taper doesn't, take away from the overall market growth next year.
Yeah, being that these are comprised largely of stocks, individual issue stocks, it is really a function of what the stock market does to a large extent, right?
Definitely, and but with ETFs, you do get a lot of developed market and international exposure that you can look at. And as we saw, investors are really starting to embrace ETFs as ways to get at markets that they might not have been able to traditionally get, such as with that DXJ fund that focuses on Japan but hedges out the yen. So I think these will continue to be very popular going into 2014.
All right. Do you own any of the ones that you rattled off here?
I do not.
Okay. You can always get more information on ETFs, current commentary, educational information, right in the ETF section of our website, Zacks.com. So if you're not there already, you're watching this video out in syndication land, get on over to Zacks.com. You can link to that ETF section right off the homepage. With Eric, I'm Terry Ruffalo.